One way to measure the prospects for an industry is to look at whether it attracts hedge fund investment. By that standard, litigation finance looks very good. Hedge funds and private equity firms are making more and bigger investments in high-stakes personal injury lawsuits, especially those against drug companies and medical device manufacturers. Litigation financing has been growing for a couple of decades, but until recently it was mostly employed in complex, long-term commercial litigation. In the past, when funders did get involved in personal injury cases, it was for relatively small stakes. But now, the $10 billion litigation finance business can keep up its booming pace of growth, in part by expanding to mass-tort cases. Third-party funding is crucial to help plaintiffs fight well-heeled defendants in high-stakes personal injury litigation, according to Tom Girardi of Girardi Keese, one of the nation's most successful mass-tort lawyers. If you are going to fight them, you better have the money to properly present these cases, he said. The field of investors is getting crowded. Adam J. Levitt, an attorney in Chicago who has brought mass-tort cases, said there was an ever-increasing influx of hedge funds into the litigation funding space. Hedge funds such as Fortress Investment Group, Pravati Capital and Viraj Capital Management have lent money to mass-tort law firms in recent years, according to lawyers and lending executives. And this hedge fund investment comes at a time when regulatory changes have made banks less willing to lend to law firms. According to an email sent to its investors last year, EJF Capital, a $6 billion hedge fund, is raising money for its third investment vehicle that will lend money to lawyers bringing mass-tort cases. The new fund aims to raise $300 million on top of the nearly $450 million the Arlington, Virginia, hedge fund has already lent to personal injury law firms.